Hello and welcome to this episode of the Just Got Paid podcast. This is the episode where we talk about the month's headlines and some of the latest news and how it could potentially impact you. So, we're going to title this episode This Month in Money: Headlines That Could Impact Your Bottom Line. So, that's going to be the title that we rock with today. But I'm your host, Eric Hellon. And again, I'm just here to chat about some of the headlines that came out this month, in the month of January 2025. Hard to believe that we're already at the end of January and heading into February. And so I want to talk about some of these things because there's a lot of news that comes out. You don't know what's true, how it impacts you. And so these episodes will be kind of like a summary of, the news and how I can kind of boil it down for you to talk about how it can impact not only your personal finances, but some of the plans that you have to potentially save money, get out of debt, improve your credit score, and buy your first home. So, those are the things that we're going to cover today. The first thing I really want to touch on is a major decision that was made that can impact your personal credit reports and your credit score. On January 7th, the Consumer Finance Protection Board was coming out and saying, hey, we're going to take any type of medical debt that a consumer may have, and we're going to remove it from credit reports. And this is a big move because a lot of folks have medical debt on their credit reports and it's impacting their score every month. And so, from this move, with them taking it off the credit reports, they're expected that most people who currently have medical debt will see it removed and their credit scores could jump up to 20 points. So that's a major move. If you're having some issues and you've been trying to pay off your credit, but you have this lingering debt, that debt will still be there. It doesn't disappear. You still owe the debt, but it doesn't show up on the credit report and therefore it doesn't impact your score. So this happened on January 7th. They finalized that decision, but I want you to keep in mind that doesn't go into effect until March 27th of this year. And it could potentially be reversed by the current administration. So this is great news, but I want you to kind of hold your breath and hope that this goes through and is, applied and doesn't get reversed by the current administration. But that is some major news just to start the year with in 2025. So if you have any medical debt on your credit report, definitely take a look at your credit report, know what's on there, and hopefully it'll go away as far as reporting on March 27th, but you still owe that debt. So take care of it as soon as you can. The second biggest news just came out about a day or two ago, and that was that the Federal Reserve is going to hold steady with their rates. And I know this can be kind of a bad news, right? We were hoping that the Federal Reserve was going to lower the rates, and try to manage inflation and help those who are looking to buy their first home kind of lock in some lower rates, but that just is not happening. The Federal Reserve rate doesn't have a direct impact to mortgage rates. Sometimes your mortgage rates, when you talk to a lender, they've already kind of planned on what the Federal Reserve is going to do. And so they bake in those costs or that risk into the current rate that they're giving you. So doesn't necessarily mean that just because they say one thing, it has a direct influence or impact on that mortgage rate that you're giving like that same day. Doesn't work that way. So still talk to your lender if you're thinking about buying a home. Find out what are rates for you. Everybody's rate is going to be different and rates change every day. And so you want to know what the rates are because you want to know ultimately what your payments are going to be. You only care about the rate because you want to know that you can afford to pay your mortgage. You don't want to live to be paying the mortgage. So to give you an idea of where rates are at the end of January, we were about 6.96 on a national level. I'm in California, so here in California, we were about 7.24, which was the average rate. And so, it's significantly higher than where it was, obviously, during COVID times when everybody was getting 2 and 3%. But we have had much higher interest rates, and not that far long ago, rates were in 8s and 9%. And so consider the rate, but realize that it really comes down to what is that mortgage payment going to be on the house that you're looking for. and rates do go up and they do come down. So there could be potential for you to lower your rate through a refi in the future. So keep that in mind. The goal here is that you would get your foot in the door, buy a home as long as you can afford to pay the mortgage, and then figure out what happens with rates in the future. If your rate is fixed and you can afford that payment, then get in now because nothing is promised. We don't know what's going to happen in the future. If rates tend to go higher, then you could be priced out of the market. So keep that in mind. Another thing to keep in mind when it comes to rates is that everybody is waiting for rates to drop. Everybody wants the interest rates to drop so they can get it back into, the market. But the issue with that is when interest rates do drop, eventually they will, there's so many people and there's so much pent up demand that if everybody floods the market, competition is going to heat up and home prices are inevitably going to increase. So there could be better deals in the marketplace right now if homes are sitting on the market a little bit longer for you to negotiate price, for you to get the seller to contribute to closing costs, or even get the seller to buy down your rate. So there may be opportunities, better opportunities in today's market than there will be when rates eventually do come down. So just keep that in mind as you're thinking about where rates are at and where your mortgage payments are going to be. Another big headline is that tax season has officially started. And so if you're thinking about filing your taxes early because you tend to get a refund, you can do so now with the IRS. Keep in mind that when it comes to filing your taxes, that you only have to pay if you make over a certain amount. You should be able to file for free. So don't feel like you got to pay a lot of money to file your taxes unless they're intricate and you have businesses and things of that nature that you really have to adjust for. But if your adjusted gross income is under $84,000, the IRS allows you to file for free and you can actually file directly with the IRS. I know people tend to use different programs and software to make life easier, but just keep that in mind that you can file for free if your adjusted gross income is under $84,000 a year. When it comes to filing taxes, I tend to work with clients and some that celebrate a big refund, some that have to pay every year. But keep in mind that you kind of want to be right around that zero mark where you're not owing a lot, but you're not getting a big refund either. When you get a big tax refund, that means that you've paid too much all year long to the government. The government has taken that money and they're loaning it out and they're making money off of your money. And then when you file your taxes, they're giving you that big refund as a thank you for letting us make money off of you. So keep that in mind. I know, like I said, some people celebrate getting a big refund, but that just means that you didn't quite use your money the best way you could. You didn't make money off of your own money. You let the government make money off of your money. So talk to your tax professional, talk to your HR or payroll at your company, figure out ways to kind of bring that refund down so that you're getting more of your money and you can invest it on your own, through more maybe your 401k, Roth IRA, things of that nature that you can start to invest in. That way you're making money on your own money and then pay the IRS what you owe them if you have to pay. But again, try to get as close to zero as you can where you don't have to pay a big amount, but then you're also not getting a big refund. So keep that in mind this tax season. And definitely be sure to file your taxes on time. April 15th, as you know, is going to be the deadline. They do have a 6 month, grace period or extension, but your payments are still due. So it's not really a big extension because you still are going to be on the hook for anything that you owe. So just keep that in mind. Try to file your taxes on time if you can. One of the cool things, well, I should say, one of the not so cool things is that you actually, if you've been using Venmo or Cash App to transfer money, maybe you have a small business side hustle, whatever the case may be, they are now going to look at that and you will need to file a 1099K. So this is going to be different depending on where you're at. On a federal level, if you've earned more than $5,000, if you've had more than $5,000 processed through Venmo, Cash App, or the others, you will have to file that 1099K. In some states, it's as low as $600. So definitely, again, talk to a tax professional, find out, if you're going to have to file additional paperwork for that transfer of funds through those apps. So just keep that in mind. Again, not such a cool thing. I know a lot of folks who use those apps, but you will be on the hook for that extra paperwork to be done. The last thing I want to cover is, regarding student loans. We talk with a lot of clients, we help them with their budget, and a lot of people owe student loans. And since COVID, a lot of those payments have been, pushed to the side. They're in forbearance. And so there's no payment due. Or even if recently, since 2023, when payments were coming back to play, they launched the SAVE program, where it was an income-based program, and so there was better options for you, to lower your payments. Well, that SAVE program is kind of getting a lot of flack, a lot of heat right now. And so we're not sure if that's going to continue to exist in 2025. If you're on the program or you're looking for opportunities to get a lower payment, try to utilize that program as much as you can. If it does get canceled, there's talks of other income-based programs, but not as good as that one. So, if you're trying to lower your student loan debt, but you're really, trying to make ends meet and you got to figure out ways to make that payment, take advantage of that program while you can. It may go away. The other big news when it comes to student loans is that if you miss a payment, what they were doing since COVID was they weren't really reporting or having a hit to your credit if you were, in forbearance and struggling to make your payments. Well, that's going to be changing. So they will start to report those lates. It will take an impact, a hit to your credit score. And so you do want to make those payments on time. If you're 30 days late, you're officially late on your payment, right? You officially missed a payment. But these servicers typically don't report until you're 90 days late. So they give you a grace period to catch up. But if you're 90 days late, they will report, and now it will actually impact your credit score. So keep that in mind. Pay those student loans on time. Get into an income payment plan that you can afford. And if you need any help in any of this stuff, whether it's your student loans and setting up a budget, anything like that, definitely don't hesitate to reach out and set up a budgeting session with us. But these are the top headlines that I wanted to cover. I wanted to keep this short and sweet, give you some summaries of what's happening and what's happened in January as we enter February 2025. If you have any questions at all, definitely don't hesitate to reach out. I hope and I pray that you're getting your finances together. You're getting out of the rent trap. You're getting out of the paycheck to paycheck trap. And if you need any help, we're here to help. I hope that you have a blessed day. And until the next episode, take care.